assisting financial advisors and doing some financial planning in amidst the of the COVID-19 pandemic. And we have Kristina Sperry and Finfrock on, some financial advisors in Evansville, and giving some information about what people should be doing in terms of investment strategy, as well as answering our questions that we might have during this time. So, Kristina, do you want to introduce yourself first?
Yes. Hello, my name is Kristina Sperry. I am a certified financial planner that works at State Bank of Cross Plains. I predominantly work in the Evansville, Oregon, and Brooklyn locations, but we do have locations throughout Madison. I have been in the industry for 15 plus years now, starting my career off in Chicago at some of the wealth management firms there, and had moved to Wisconsin a little over 11 years ago now with my family. I'm currently married and I have one son who is 9 years old, and we live in DeForest, Wisconsin. My primary goal with working in financial advisory is education and helping people plan for retirement, realizing whatever goals they have, and just getting them to the place where they feel comfortable in their lives with their money situation.
Thank you, Kristina. Christian, would you like to introduce yourself?
Yeah, I'd be happy to. I hope that my volume's okay. I'm in my office, though my team and I are working remotely. So normally I would be at home, but I wanted a stronger signal. So yeah, very similar to Kristina. I've also been in the industry for 15 years. This is actually a second career for me. I grew up in a very, very poor, very uneducated family. I'm the first and only member of my family to go to graduate high school. I served 5 years in the Army, and I got a degree in criminal justice. Thought I was going to be an FBI agent, but my dad invented a device that started a business and became a millionaire, and then made a lot of really bad decisions. I selfishly think that the advisor that he went to probably should have been put in jail for some of the recommendations. And about 11 years later, they foreclosed on their home and went through bankruptcy. So I went back to college, started out as a certificate, and I ended up getting an associate's degree in finance, associate's in business, a bachelor's in finance, and a master's degree in financial services. In 2012, I used to work at one of the largest companies in the world, and I was, the number one advisor, whatever that means. Really, it means I sold more than anybody else, and I focused on what they call the private client group, which is a minimum of $5 million. And quite frankly, I grew somewhat disgusted with the financial industry. I love my industry, but I think some of the normal investment advice is somewhat flawed. And I decided to start my own company in 2011, I think. And at that time, I decided to focus primarily on retirement planning. So my average client is 60 years old. They've already accumulated their wealth for the most part. They're typically far more conservative. A very, very small percentage of my clients, less than 3%, are very affluent. I focus on private practice physicians and dentists, and these typically are people paying well in excess of $100,000 a year in income taxes. And we're trying to look for ways to legally, ethically, morally manipulate the IRS, if you will, legally, ethically, and morally. And so, but for the most part, I work with people that are either already retired or very, very close to retirement. And we're very much a boutique. So we only work with about 270 families. We are still growing. The unfortunate thing about our practice is our clients are older. And so we lose, unfortunately, as many clients per year as we sometimes bring on. So that's interesting from a business perspective. And obviously, the plan that you have, certainly in the economic environment we find ourselves in today, is whether that plan works or not is when we're going to find out, when times are tough, not the last 10 years when times have been great. So sorry for the longest introduction ever.
So I wanted to just have you guys on today because there has been a lot of volatility in the market. There's been a lot of information put out there, and I think that people may be concerned about what they should be doing and what options that are now presented, especially in regards to the CARES Act and their investments. And so I just wanted to check in with you guys and see what you're seeing and what you would recommend for people to be considering when they're looking at their financial landscape, and in particular in regards to their investment strategy. Are there things that they should be considering, and what might those be?
Kristina, go ahead.
Okay, I was going to say, I think the most important thing you can do in your career, and unfortunately it usually comes up during a crisis like this, is have a relationship with a financial professional. There are many things that do come up, such as the CARE Act that was brought up that, kind of changes the landscape, whether you're retired or looking to retire. If you have a Benny IRA, do you have to take a distribution this year? There's a lot of questions that come up. Additionally, during these times, if you're not working with a financial planner, you typically see that maybe your portfolio has some holes in it, are missing some things so that you're not able to weather these kind of storms. There's one thing that's constant, it's going to be these. I know this is an unprecedented time, but again, we always have situations that come up like this, whether it be the market crash that happened a number of years ago. Now we're dealing with COVID. Working with a financial planner is going to help you weather these storms, keep moving forward, keeping your goals in mind and keeping you on track with your plan. And that is the best thing you can do. Also, it's a great touchstone, being there, having, even if you're starting off a relationship, to calling and saying, either calling myself or Christian and being like, I'm concerned, what's going on? Starting that relationship, getting that working so that you have a professional that can help you with it in these times.
Yeah, the only thing I would add is that, and I completely agree, I think having a planner and having a plan that's unique to your situation and keeping the long-term perspective. So, certainly, my opinion, young people, there's a lot of opportunity. So I'm very much an optimist, and I don't work with a lot of young people, but I'm talking to all my friends and people my age and saying there might be more opportunity today than ever existed. So, but also look for how can we take the lemons that we've been given and make lemonade? And there are lots of opportunities. There's tax planning opportunities, whether that means maybe now's a good time to do a Roth conversion, maybe an HSA. I mean, there's so many different opportunities. Maybe tax loss harvesting if you had some stocks. 2 years ago, nobody wanted to sell their stocks, even though they might have been concerned about risk, but they had all these gains. So now all of a sudden they might be back in line. You hate to take a loss, but if we can use the tax benefits of that loss and maybe reposition. But then obviously for retirees, this is a gut check for a lot of people. I've also been in the business since 2005 and I've been through 2008, but for many people, the last 10 years, the markets have been almost, for the most part, straight up. We had a little bit of loss in 2018, but now is when it's more important than ever to see, is that plan going to work? And if possible, you don't want to be reactive. You want to be more proactive. So what we're telling people, again, my clients are older, they're mostly in retirement. We're reassessing that risk tolerance because now all of a sudden behavioral finance comes into play and you might have thought you were more aggressive. So my conversation is, if you really are feeling more conservative, do we really want to make changes now that we're in the midst of this crisis, if you will, or are we comfortable holding tight? Is our plan going to be okay? And if and when the markets ultimately recover, that's probably when we should start making changes. So let's try to not be reactionary if possible, instead proactive. And now's just a good time. Christine said this, check in. I'm sure she's doing this also, checking in with our clients and saying, hey, what's changed? If nothing has really changed, this is why we have the plan. Let's instead look for opportunities and be on the offense instead of defense.
Exactly.
So I think both of you kind of touched on this a little bit, but you have a plan in place and then something like this happens. And I think a lot of people are wondering, is now the time, do I start selling off my stuff or do I take this as an opportunity and start purchasing things? Is there, and obviously it'll be dictated by their plan and their strategy and their age group and their plan for retirement, but are there things that you are telling people or ways that people should be framing these questions so that when they're looking at these things, is this an opportunity for me to buy? Should I start selling? That can help them to make those decisions. Christian, do you have any input on that?
Yeah, I think so. I think this is probably going to be far more in Christine's wheelhouse because I think the answer is, first of all, there is opportunity, obviously. And so forgive me, my phone is going off. It depends is what I'm going to say. I know that's the most generic answer ever, but the reality is it really does depend because for most people, again, for me, we just want to go back and look at the analytics and say, are you going to run out of money? That's, for my clients, that's the most important typically. Do I have enough money to last as long as I do? Also, let's go back to just basic fundamentals. Do you have an emergency reserve account? Do you have debt? Do you have things like that? And so in my opinion, again, I don't work with a lot of younger people, but those are the priorities when you're young. Get rid of debt, save up that cash. And so that when a situation like this arises, let's use the cash and maybe there is opportunity. Now, this is where I said, Christine, probably more in your wheelhouse. I'm not going to typically be, hey, there's stock advice, if you will. But for somebody that's young and has time and has the risk tolerance, there's a lot of opportunity. Maybe cruise lines, maybe hotels, maybe airlines, oil and gas. I mean, we're seeing things where supply and demand are completely out of whack, and there are areas of the market that are just so irrational right now that really, for the long term, probably an enormous amount of opportunity if we can buy and hold tight, knowing that there is going to be a lot of volatility. But also, lastly, is that dollar cost averaging. So if you're not sure, maybe you don't want to make an entry point. Everybody freezes in chaos and panic, and you want to just make a plan and then try not to second guess your decision, because so far it's been what we would refer to as a V-shaped recovery. But does that mean we're out of the danger zone? Maybe not. I mean, the economy is shut down. Will it be a W? It could be. So some people are saying, I have money, I want to make a decision. When's the time to do that? I think, again, everybody's situation is different, and that's why you partner with a financial planner that's going to help check in. And one of the things I've always said, most of the time when I'm in the media, a really good financial planner, their job is to talk you into making more difficult decisions and out of making really easy decisions. And one of the easiest things we can do is acting emotionally. With investing, you do not want to act emotionally. And a good advisor is going to say, hopefully, I mean, again, review your situation, but don't panic sell. Maybe panic buy if you have the intestinal fortitude.
Yeah, I know one thing that I've been talking with some clients is, again, everyone's situation is going to be different, but, good opportunity now, like people were making their 2019 contributions to an IRA Roth. I've had a number of clients, after reviewing their plan, that doing their 2020 contribution maybe earlier than they could, doing it now, letting into this buying opportunity was a good plan for them. Some other people have been looking at their 401ks. Can they increase, if they're continuing to work and have a good source of income, can they look at increasing their contributions or, doing something along those ways to take advantage of this dip in the market that we have right now? I cannot agree more that just having an advisor going over your plan, making sure that you are on track, not doing an emotional response to what's happening is where you're going to win at the end.
In regards to the CARES Act and the emergency loan opportunity that was available for somebody that may have lost their job or maybe looking at some things, what are some things that they should consider before taking money out of their 401k, or what would be your advice to consider when looking and trying to make those decisions?
I think sometimes that decision is out of their hands. I mean, you have to take care of your family, you have to take care of yourself, and sometimes you did have this savings for retirement, but sometimes you do need to take it, and you have to unfortunately face maybe the tax consequences or just even working an extra couple of years to make it up in order to come back to where you were. But the reality is you have to take care of yourself during this time. Again, talking to a financial advisor, maybe kind of looking at how much you really need to take out compared to what, taking out everything, understanding the taxes they're having, and maybe even possibly finding some other options instead of actually, taking the money out. Sometimes there's other things that we can kind of recognize that maybe they don't. And I think that's the important part, is just getting a second, maybe even a third opinion before just jumping in and doing something like that.
Yeah, I agree. I'm personally really sensitive to this issue because I'm realistic that, as Christine said, it's out of our control. I mean, even, as a business owner, my business is very different today. This is out of my control. I can't, even if my clients wanted to see me, is it safe for them to do so? So I think hopefully if you have a plan in place in the first place, which includes things like an emergency reserve account, but I get it. Life happens, and we have to deal with what's given. I'm sensitive because I personally think anytime we give people access to their retirement accounts for anything other than retirement, it really creates danger more than anything. And so I can tell you, working in retirement planning almost exclusively, people are overwhelmingly not prepared for retirement. In the good old days, $1 million was enough for most people when we could take out 4% per year. And that's just probably not realistic today. Now, everybody's situation, again, is very different. And some people need $1 million, some people need $2 million, some people need 200,000. And so But I think when you look at, I love, again, Christine said this, that's why you have a planner. And so you can look at all of the options. You know, does it make sense to take money from our 401k, or maybe we want to use a home equity line of credit, which would be more advantageous going forward? Are there tax benefits to one or the other? What's interesting, given our current scenario today, is not only do we have the CARES Act, but remember, not that long ago, the Secure Act was passed. And so in a very short period of time, we've been dealt, I mean, there's really, it's crazy. I mean, this is a black swan. You know, we had the Secure Act in January. Now we've got the CARES Act. We've got the virus, which is impacting the way in which we do our everyday living. We've got businesses that are shut down. We've got the oil situation, which was, you know, Russia and Saudi Arabia. And then we also have the Federal Reserve doing everything in their power to rescue us. But, you know, interest rate, there's really a perfect storm. And this is why they call it a black swan. And so I think, you know, I'm a big fan of making what they call a T-chart, where you say, here's the benefits and the drawbacks, and looking at all of your available options, and really looking not just at the short term. Obviously, your family and your personal health and your mental wellness is really important. But what's that going to look like in the midterm and in the long term? And if we choose to access that 401k, what's our strategy to pay it back? And where does that fit into our plan and our budget and things like that?
As financial planners, you guys work primarily with investments. And I know, Kristen, you say that you work primarily with people that are retiring or already retired. You guys have both talked a lot about working with your financial planner and getting information and talking to them and communicating with them. Is a financial planner someone that's going to be able to help people with their budgets and with their overall financial picture, or is it going to be strictly focused on their finances? Where should people turn to get more of that overall comprehensive financial advice?
I think you have to look at the financial planner. Different financial planners have different business plans. Honestly, one of my programs that I run at State Bank of Cross Plains is working with millennials. We're trying to develop a group for the younger clientele to come in, where they can work with me. And even if they don't have any money for investments right now, we do things like planning budgets. If they're getting married, how do you combine assets? How do you handle your mortgage? Your student loan debt? How do you get a mortgage? Being that kind of touchstone for them to help them answer questions like that, because maybe they didn't learn that information from their parents. Sometimes their parents have more questions than they do on those kind of things. So that is something, like I said, like myself at the bank, this is what I do now. Some of the other advisors, you know, they concentrate on different areas. And so you really need to you need to find that advisor to do it. But there are resources out there. I think one of the big thing too is to find actually a professional to talk to too. It's very easy to Google some of these questions and like you will get an answer, but actually putting a plan in place and personalizing it to you to have you understand and more importantly believe in it is really what makes it successful in the end for you.
Yeah. I couldn't agree. I think what Christine said is you need to work with a planner that focuses on your area of need. That doesn't mean that the planner or the advisor is wrong. There's different layers of financial advice. Some people are primarily financial salespeople. They're going to sell you a stock or their perfect mix of stocks, and that's fine. That's what they do. Some people are more planners, where they're going to focus on the budget and debt and things like that. And some people are going to look at a much broader picture. I think it's interesting though that term budget. I think it's important no matter what stage of life. You know, for my retiree clients, knowing that budget is really important. I think the word budget gets misconstrued because many people think of budget as restriction, and it shouldn't. In my opinion, the budget shouldn't restrict you. It should give you permission to spend your money freely. But it's the concept of telling your money where to go and not letting your money tell you what you're going to be able to do. And I think the majority of Americans today, it's the latter. There's more month for most of us than there is money. That's not uncommon. I have young children also, mortgage, but we want to get to the point where we're telling our money where to go. So if making charitable gifts is important, we do that at the beginning. We don't wait and see how much money's left. There will never be money. For me, as a retiree, that budget is so important. We review that on an annual basis because certainly it changes. You might spend more money on vacation, maybe not. But again, my clients, most of the time, their number one concern is, am I going to outlive my money? Well, we don't know when death is, but we can make some reasonable assumptions. But when I know what you're spending and I can add in things like taxes and inflation and longevity, it gives me a more clear picture. And if I'm confident, as Christine just said, hopefully I'm going to bring confidence to you and say, you know, sometimes you guys, many of you on this call probably know this, but sometimes I have to convince my clients to spend their money because they don't want to spend it, you know, and so, you know, it's okay to enjoy your own retirement and spend your money as well. I want to help you take care of your kids, but don't be afraid. You've been working for 40 years for this money. But I think, again, everybody's situation is so unique, and you will find a person that will help specialize. And so for us, to Christine's point, we are not the best advisor for the millennials. I have some millennials in the office that work with me. That's just not our wheel horse. We are not going to be the best advisor for them. And we're very upfront with that. You want to find a really good relationship for where you're at, and hopefully somebody you can grow with as well.
I'd like to add a point to what you were saying, Christian, about the budget is that the other advantage of working with an advisor is that we take the emotion out of it. Like he was saying, like with charitable or sometimes even with family, we can go in and look at the budget. Like you said, it should be, you know, this is your permission to spend. These are what's important to you. But we can help organize that for you and make sure, you know, sometimes people aren't focusing on the, you know, the important stuff or like what's really going to push them over the edge to maybe where they can be more charitable at the end. Having that doesn't have the emotional attachments, you have a very good benefit to you too.
You were cutting out in and out for me a little bit on that last bit, Christine. I don't know if everybody else. Does anybody that's in here today have questions that they wanted to have answered? I had one more that I thought that we might have people. So if they're laid off from their jobs, what should they do with their existing 401k?
I'm sorry, can you repeat that?
Yeah, if someone is laid off from their job right now, what should they do with that existing 401k that they had at that employer?
I'm a big believer in getting it into your own name, not leaving it with the company that you are with. You have more control, you have more investment options. When you roll it over into an IRA or to a Roth in your own name, you can, you know, we can start looking at creating that plan for you. You know, unfortunately, if you need to take withdrawals to help with your living expenses until you find a new job, that is something we can start working on. But, you know, if hopefully maybe you can move it and let it grow, then that's, you know, we can help with the investments and find the risk tolerance and the plan that would best work for you. But again, I'm a believer in getting it into your own name.
Yeah, I agree. I think, again, and we've both said this so much, it's almost like we have lawyers in the room. You know? It's so unique and different. But what I always say when it comes to that is this layoff temporary? Is it permanent? And how old are you? Because the reality is, I also agree, for most people, getting that money into your own IRA, that's an individual retirement account. It's your money. You have all of the investment choices. You could take as much risk or as much safety. You're in control of the cost. And it's usually more transparent. However, I would also say that there are benefits of a company plan that an IRA doesn't have. For example, the age 55 exception rule. So if I have a client that's 57 years old and they lose their job, they can take money out of that retirement plan without a penalty. If they instead put that money in an IRA, they're going to pay a penalty. And so it's very important that we understand the benefits and the drawbacks. If you're over 59 and a half, there's very few benefits that a 401k is going to have over an IRA. There are some. It's important to look at all of them. But for the most part, again, it depends on your age and what you are looking to do, because IRAs have a lot of benefits and advantages, but they also have drawbacks. And so looking at advantages, disadvantages, and strings attached and applying that to your specific situation. And that, again, and Christine said this, is why you have a plan. And a plan looks at everything. What's a plan going to do? Well, everything is going well and while you're employed and you're happy and healthy. But what happens if you get sick or you become incapacitated or you become unemployed or your children get divorced or have something like that? And then what happens in the event of death of one person or both people? What's that money going to do? And that's where the estate planning side of it comes into play. The income, the tax planning, the risk, the legacy, the investments. And so that's the difference of having a plan as opposed to having a portfolio. And that's why Kristine's a certified financial planner. She's going to use that designation in education. Most advisors don't have that. And that is why it's so important to understand that a plan is different than a portfolio. Anybody can log on. Kristine used the Google monster. I love using the Google monster because you can find anything you want with Google, but you're also going to find things you don't want with Google, and it's not applied to your situation. So, but I think it's important to understand, is this a layoff? Is this a furlough? Is this a termination? And are you going back to that job? And then let's decide what to do with that money. And for the most part, I agree. Take the money with you if you can.
You both mentioned quite a few times having a plan and making sure you have a financial planner. How do you find the planner that's right for you? You just call around? Can they make appointments or ask questions at the thing? What's the best way to find the financial planner that works best for them?
You should interview them like you would a job.
Yeah.
Because, you know, my personality and Christian's personality are going to be different. You want to make sure it's someone that you feel confident in, someone that you trust, someone that does have the education certifications behind them. Look at their reviews, look at their reputation in the, you know, in the town that you're in. You know, you need to find somebody that's, you know, ethical, responsible, and someone that is, you know, willing to work with you on what you're looking to do. You know, not just finding someone that's going to sell you, you know, sell you a product that, you know, because it's a one and done deal if you're really looking for a plan. So,
yeah, I think it's an interview process. I think, you know, this is the biggest financial decision you're ever going to make. I mean, a lot of times we think our mortgages, and at the time when you're young, it probably will be. But if you do your retirement plan right, your retirement plan will be much bigger, usually, than your mortgage. And so I think the personality is really important. I think their area of expertise and where they specialize. I think their philosophy, and I think their restrictions as well as their opportunities. Are you restricted on what you can offer? Are there different conflicts of interest that we should be aware of, and what are those? And then, you know, I always talk about the three worlds of money. They're all great, but usually a plan is going to involve all three worlds, whether that's the Wall Street world, the banking world, the insurance world, and understanding the advantages, disadvantages, and strings attached. And I think obviously geography plays a big part in that, but I'm sure Kristine would agree with me. There's as many people that don't want to work with an advisor in their own community as the ones that do want to work with their advisor, and that's okay. I mean, this is a very trust-based relationship. I always tell my clients, your financial planner is going to be a lot like the relationship you have with your primary physician. The difference is your primary physician makes you disrobe and stand on a scale. That's uncomfortable for any of us. A financial planner is going to make you open up your checkbook, and then you start realizing what are your you know, where your values lie when it comes to money. And so it's really important to find somebody that you like and trust, and that if you want somebody that's in your local community, you find somebody that's in your local community, but also understand that there's challenges with that as well. And I think, and then again, what type of client do you serve the best? And most advisors will be very honest with you and tell you, you know, a good advisor is going to want a client base that fits them as well as they're going to fit their client.
All right. Did anybody have other questions that we didn't answer? Well, I want to thank both of you for coming on and giving this information. I think it's really timely and it's important for a conversation to have. If people want more information or want to get in touch with you, if you guys could send me over your contact information, I'll include that, the information that I put up when I post the video. I will send the video out in our e-blast that goes out on Fridays from the chamber. If you are on the call and you are not receiving those, you can let me know either via Facebook or email the chamber office and get that. We've also been posting them on our website on our Evans Together page. You can go on there and visit that page as well. So thank you both. I really appreciate it.
yeah, thank you.
Yeah, my pleasure. Thank you.
Great. Thanks, everyone.